Good evening. Good evening, everyone. My name is Sarah Wells, and I want to welcome you here tonight, whether you're joining us for the first time or if you've been attending every session with us this year. And we are grateful that you are choosing to be here with us tonight to talk a bit about the financial benefits of land conservation. This programming is being funded through the Work and Forest Initiative of the Massachusetts Department of Conservation and Recreation, and it's organized collaboratively by UMass Amherst Extension and Mount Grace Land Conservation Trust, and also with the support from the Massachusetts Land Trust Coalition. It's a little hard to believe, but tonight marks our sixth and final installment in this year's series. And as a reminder, the website that's highlighted in yellow up at the top of the screen, masswoods.org, you're welcome to go there at any time if you want to watch or rewatch any of the previous recordings. And if at this point it would be more helpful to talk to someone one-on-one about your specific circumstances or what you or your family are thinking about, then we would love to have the opportunity to connect you directly with a resource professional. So I hope that you'll be in touch if that applies to you. Our speakers tonight are Mark Robinson, Tom Anderson, and Mike Downey. And our agenda is pretty straightforward. We are going to spend the bulk of our time tonight really hearing from Mark Robinson, who will walk us through the financial benefits and considerations of land protection. And he is in a really good position to be able to talk us through that. He has a lot of experience. He's been the executive director of the Compact of Cape Cod Land Trust since 1986, and he's known as the go-to person for all open space matters on the Cape. And I stole that from their website, but I have to say, I think it applies even more broadly than on the Cape. I think it's at least on a statewide level as well, that he's known as a go-to person for all things land conservation. It's through the Compact, as it's known, that Mark is able to provide direct technical assistance to more than 30 conservation groups, many of which are land trust. And I think that's a huge part of the reason why Cape Cod is able to churn out what I consider a pretty stunning number of conservation projects on a regular basis, because they're truly working together. And it's that model of collaborative conservation that's made the Compact of over in Cape Cod really a national model. So we're very grateful that Mark is here with us tonight. After we hear from Mark, we'll hear briefly from Tom Anderson about the Massachusetts Conservation Land Tax Credit Program. And if you've been tuning in with us, you've definitely heard us mention this program before. And Tom has been at the helm running this program. I think it's a very progressive program. It's an incredibly popular program, and Tom has been running it since its inception, which really puts him in regular communication with land trusts from throughout the state. And when that is paired with his role of also providing critical support to the conservation restriction review process, it means that he's also carefully read and reviewed at least hundreds, I would guess, of conservation restrictions at this point. And it's probably fair to say that at this particular moment in time, there may not be a conservation restriction that makes its way through the state review process that Tom hasn't directly seen and helped to support. So we very much appreciate him taking the time to be here with us tonight. So those first two pieces of the agenda will center pretty heavily on the land protection side and various tax considerations. But thankfully we have Mike Downey here, who's going to help round out the evening by sharing a bit about some stewardship resources for people who are thinking about doing things on the land management side, either in conjunction with land protection or even separate from it. And Mike is the coordinator of the Forest Stewardship Program for the Massachusetts Department of Conservation and Recreation. He's also a forester. and he has more than 20 years of experience, and he does a lot of work directly with private landowners, also with municipalities. So he's definitely a wealth of information and is intimately familiar with the types of questions that people often have when they're looking to manage their woods. And the final thing I'll say that about Mike is I really appreciate that he's someone who not only knows the woods, but he can connect the dots between people and programs so that all of these plans that we talk about can really turn into projects. So we're very grateful again that for the three of them for being here tonight. And I'm going to go ahead and stop sharing my screen if I can move my little Zoom box out of the way to do that. Okay, and a couple of final notes on logistics for tonight. There'll be time in between each section where people can unmute and ask questions. But per usual, anytime you have a question and want to put something in the chat, we welcome that and we encourage that. I will do my best to keep track of all the questions. And if for any reason there's something that we don't get to, we will be sending a follow-up email with the answers that we can put out there to the best of our ability. And as you all know, this session is being recorded, but our goal is to stop the recording a bit before 8 o'clock. So if people are more comfortable asking questions in an unrecorded environment, then we've saved some space for that. Okay, so with that, I think I will hand it over to you, Mark.
Thank you, Sarah. How's that looking? Okay. Great.
That looks great. And I just want to apologize in advance. I'm going to sound like I'm rudely interrupting Mark in a bit because he's asked for a 5-minute warning when he gets to the end.
That's
so
right.
Thanks in advance.
Won't take it personally. Thank you. Thank you, Sarah. And thank you, UMass, for inviting me to participate. The compact has been around since 1986, and we provide technical assistance to now 31 land trusts and watershed associations in southeastern Mass, not just the Cape. And so our mission is simply that, to protect, increase the protection, accelerate and protect as much open space on the Cape as strategically is important. Tonight, what I want to do is talk to you as landowners. I'm usually talking to land trusts, but I think it's the same information, but I want to make it clear that I'm trying to put my hat on as a landowner. I wish I was a landowner. And what kind of information would I want to know when I take the kind of a daunting, complex path to thinking about preserving my land. And so you should not be motivated strictly by these tax benefits that we're going to talk about. I have found in my experience that you probably can always make more money selling it on the market, developing the land, and feeling rotten about yourself for the rest of your life. I say that because you wouldn't be here if you didn't have some interest in conservation. And my experience has been that land trusts will succeed on a project with landowners that want them to succeed. And by that, I mean they want to see the land preserved because it's important to them. It's family land, it's land that has got a real psychic benefit to them, as well as these tax benefits. And so with that as a motivation that you want to see the land protected, isn't it nice to know that there are these side benefits in the form of financial tax incentives to do what you want to do anyway and be rewarded for it? We use tax policy in America to induce a lot of social goods, whether it's encouraging people to put solar panels on their roof or providing childcare. Why not subsidize people that are trying to preserve their land? It's a social good as well. And so there's a number of programs that have been set up, both by the state, federal, and even through the towns, to encourage people and provide them with these benefits for doing the right thing with their land. So the other thing is that all of these situations are very particular to you and your family. There's no one situation that is exactly like the other. The way the land is held determines how some of these benefits will flow, how long you've owned the land, whether it's a long term over a year or less, whether it's You're sharing the benefits with a lot of other people in the family or just by yourself. And so I'm going to use an example throughout here of a couple who are married and file their federal taxes jointly. Obviously, the same principles apply if you're a single person or a head of a household, but that's the example that I'm going to be using. So keep in mind that the tax brackets will change over the years. I'm using 2022, and but they do change every few years, and you have to keep up on top of this. The final thing is I am not an accountant. I'm not a tax lawyer. I'm not any kind of professional that way. I'm just a guy who's worked with hundreds of families trying to maximize the things that they're entitled to in terms of tax benefits. And why do I do that? Because the more I can incentivize people to preserve their land and get them these benefits, the more success we'll have over time. The other thing is that you have to recognize that it takes time to work through any of these conservation projects. So Tom Anderson will talk later about the conservation land tax credit. That one, there's a waiting list. You have to plan ahead for something like that. Anyway, let's get going. And it's going to glance through a lot of these slides. They're going to be available as a website and Dropbox link. It's a very long, complicated thing, and it's a lot of numbers. I don't to scare people with the numbers. I want you to get the principles, and that's what's the most important thing. Is what are these principles? A lot of accountants don't know about some of these tax benefits associated with conservation, particularly the state tax credit, which has only been around for 10, 12 years and hasn't been used by more than a few hundred people. So it's unlikely that any given CPA is going to know about that program. You need to educate them to research it with you. And the land trust in your region should be also used for advice. But we cannot do your financial planning for you. You've got to do that yourself. I could be put in jail for giving people tax advice. I'm not qualified to do that. So the main sectors of these benefits that we're going to talk about are property tax, income tax, estate tax, capital gains. The main one is the income tax. I want to spend the most time on that because I think that's probably the most powerful one that we can use in our toolbox because it's something that can be accelerated and extended over a period of time and provides sometimes the most benefit to people, and particularly when it's a very valuable property. So with property tax, obviously, if you give the land away, you don't own it anymore, you don't pay taxes on it. A key date to keep in mind is July 1st, because that's the tax exemption date. If you can record the deed before July 1st, the land will go off the tax rolls for the next fiscal year, which begins in July. If you record the deed July 2nd, somebody has to pay the next year's property taxes. So it's an important consideration when you're wondering about property tax savings. Don't forget that date. Conservation restriction, the reductions in property tax for land under restriction is highly variable throughout the state. I will say Cape Cod is much more generous than what I've heard about in most of the other parts of the state. Keep in mind, though, if you're having trouble with the assessor, they have to recognize that the state Supreme Judicial Court said in 1969 that this was something that had to be considered. They can't ignore what effect a conservation restriction has on the market value of their property. Reserve life estates are something you might have covered in one of the other talks. As long as that land is being used residential, there should not be a property tax relief for it. As soon as the person dies or releases the life estate, then there will be an elimination of the tax as it's owned now by the nonprofit. I think you've covered current use assessment and property tax reduction elsewhere. I'm not going to spend much time on that. So just a few examples. This is a 32 acre piece of land in the town of Brewster. You can see before the conservation restriction, the land was 700,000. After the restriction was imposed on all but 2 of the 32 acres, the land value plummeted way down to 125,000. So that's a big savings. You see that the house didn't change because the house is not under restriction. When you put a portion of the property under restriction, you can also continue to live there and use it. But only the land that's under restriction is going to have the effect of the decrease in property tax. And so now we'll get into income tax. So this is both on the federal side and presumably at some point on the state side. We're not going to spend much time on that because it's not available right now on the state side. So what determines the federal income tax deduction is the number one thing is the appraisal that the landowner gets to value the gift, whether it's the land itself or the value of the conservation restriction at the time of the donation. And that generates these important tax savings. It's not what the town thinks the land it's worth. It's not what Sarah or I think it's worth. It's what your appraiser says it's worth. And the higher the value of the land, the more you can factor it into your planning for tax relief. The other variable is your adjusted gross income. As you can see that these adjusted gross income is what you take the income tax deduction and reduce. So you're paying less taxes on a new taxable income because of the deduction. So another thing to keep in mind is that currently there's a permanent rule in the US tax code that enables the donor of a conservation restriction to accelerate and extend the federal income tax deduction. So instead of the 30% 6-year maximum for reducing adjusted gross income for gifts of land, you can reduce your adjusted gross income by 50% in over 16 years instead of 6 years. So that's what we mean by accelerating it, getting more reduction each year and extending it by an additional 10 years. So that's a permanent part of the tax code now. And I think it's a very valuable tool, and I'll explain later how to weave that into some of this to maximize tax benefits. So again, you need to have the land appraised if it's been held for more than a year. If it's not more than a year, it's simply the cost basis of the property that you paid for it within the past year. And you have to have an appraisal done if you're claiming more than $5,000. That's the value of the gift. Anything less than that, you can use other means of estimating. Maybe the town assessed value is okay for that. But anything more than $5,000, you have to hire an appraiser who comes up with a report and signs the form to the IRS standing by the claim that you're making. So another thing to keep in mind is that not everybody pays federal income tax. So you might have somebody living on some old family land that's become very valuable and they want to give it away or preserve it. But if they don't have income to offset, they may not be able to use some of these deductions. It's staggering how few people pay pay federal income tax in this country. But the ones who do are typically the ones who own land, and they're typically in the higher tax brackets. So these are the rules that will most benefit them. Again, the higher the tax bracket, the more these tax benefits will accrue, because you're saving more taxes on the amount of the deduction. In Massachusetts, we did approve a ballot question to have charitable deductions. The legislature has postponed it again and again. They just don't want to do it for some reason. And again, it would be an additional 5% because that's the state income tax rate. It's a flat rate. So how can we maximize federal deductions? First way is to do it over time or over space. And another one is to use the conservation restriction because of the ability to extend and accelerate the deduction that we talked about previously. Give that to one land trust, take the federal income tax deduction associated with that, and then donate the title to another group, another land trust or the town or the state. And that's a second bite at the apple. So now you've taken all the value in the land, you split it into two different ways to maximize these deductions. And that's a concept that tax attorney Stephen Small came up with. And it makes even more sense now that the tax code has changed to accelerate and extend the deductions for conservation restrictions. So one way to provide this in an installment, say you own a piece of property, it's so valuable, you don't have enough income to offset in 6 years. So you might give a 1/2 undivided interest in it. Use that up over 6 years, then donate the other half, or make it a 1/4, or make it 5/16, whatever your tax advisor says is the right way to do it, to maximize, and don't leave any of this deduction on the table. Okay, so here's an example where it's actually an 18-year process. I had one landowner considering something like this, and I said, well, here's a way to spread it out over 12 or 18 years, Max. And he said, 12 or 18 years, I'm 86. So he he ended up doing it all in one fell swoop. Again, I said you could zonate over time or over space. So here's an example on the right in case number 2, where the land was easily dividable, perhaps with road frontage, approval not required divisions, and you simply create 3 different parcels and give 100% of the interest in each of the parcels over time. And that's a good way to think about this as well. I know I'm going very fast, folks. There's a lot to cover in 30 minutes. This is really a 3-hour talk, but I want to highlight a lot of these concepts. So we talked about conservation restrictions, accelerating, extending the federal tax deduction. And there's the code right there. So you can see those 2 numbers, 50% and 15 succeeding years. That's the carry forward. And so if your tax advisor isn't sure where to look, this is the place to send them in section 170H. Capital gains. This is the tax you pay on profit of assets that appreciate, and it's anytime you own something for more than a year. Typically it appreciates, doesn't always. Sometimes it might depreciate in a down real estate market. We haven't seen one of those in recent years, but I suppose it could happen. And these are both federal and state capital gains taxes. And if you donate land, obviously you don't have to pay a capital gains tax on it because you haven't made any profit on it. If you sell the land for less than it's worth, that's a bargain sale that we'll explore in a minute. That's another way to save on capital gains, because you're taking some of the value of the land as a tax benefit, and not getting all of the profit that you otherwise could be entitled to with a sale for development. You see there are graduated rates as your income goes up. The federal capital gains tax rate goes up as well. And the state has a flat 5.1%. It's one of the highest. I think there are 7 states that might be higher, but Massachusetts has a very high capital gains state tax rate. So the state conservation land tax credit, Tom's going to talk about. But what I want to show is that, yes, Tom will send you a check. Well, it's not Tom, but it's his peers in the state agencies, Department of Revenue. They'll send you a check. What it does is it reduces the tax obligation that you have for that year. It's a one-time thing. And let's say you owed $10,000 to the state for state income tax that year that you donated the property, and you were eligible for this program. You have to be eligible for it. So the state has wiped down your tax obligation from 10,000 to 0, and they'll send you a check for the remaining 65,000. That's assuming that the land was worth at least $150,000 or the restriction, because this is a 50 cents on the dollar tax credit. It's a refundable tax credit. And a lot of people throughout the state have used it. We preserve thousands of acres that way. And one other thing is this state and local tax limitation. It does reduce the ability to reduce your federal income tax when you receive one of these state refundable tax credits. That came in under the tax reform legislation 2018. There is some willingness by the current Congress to try to limit the limitation, but we haven't seen it pass yet. So a bargain sale is another way that you can try to meet the land trust in the middle. If you can't afford to give the land away, you're willing to sell it for conservation, you're willing to sell it for less, your appraisal drives the bargain sale. Again, it's your appraisal that all these things are determined by. So fair market value determined by your appraiser. You negotiate a deal with a land trust and you sell it for less than that appraised value. The difference between the appraised value and the negotiated sale price is the charitable deduction that you're making. And that's what drives the federal and state tax benefits. So I've got an example here showing a $200,000 property. You're going to sell it. You're going to sell it for $170,000, and there's a basis, so you have to subtract that. You multiply that by the capital gains rate for the feds in the state. You come out with the net proceeds. So if you sold that same property, I'm sorry, the first one is the sale at full market value. The second one is the sale for conservation at a discount. And so you see the difference between these two numbers, 166,000 for sale for development. You're going to put a house on it. It's not going to be conservation. But if you give a break for conservation, you've made less money after you rattle through all the tax benefits. It's not a lot different though, is it? And you preserve the land. That's the power of these state, federal capital gains tax benefits, to be able to weave them into the equation. And that's the formula that you ought to be thinking about if you have to sell the land and you can't give it away. I'm not going to talk about estate tax. It applies to so few people on the federal side, but it's a very large bite if they do come after it. $13 billion in taxes came into the feds in 2019, even though only 0.2% of taxpayers were not exempt from it. So one thing that you should think about if it does apply to you is that conservation restrictions can be donated through either the will of the person or after the death. That's called a post-mortem conservation restriction. So your heirs can elect to do it afterwards in order to reduce the value of the estate and take this 40% deduction to reduce the value of the estate. But as you can see, it's a $500,000 maximum. And if you've got a $10 million property, it's not going to be a big boon for you. One thing that's interesting is that the state death tax, as we call it, actually applies to a lot more properties. So the exemptions are a lot lower on the state side than the federal side. And so you might actually be paying more to Massachusetts than you would to the IRS if you have one of these very valuable estates. So don't discount what happens at the state side with these estate taxes. So here's a summary. Take tax benefits into account. The landowner's appraisal is the most important factor. It's nobody else's opinion. It's that person's opinion. You hire the appraiser. He or she works for you and in your interest. If you don't like the result of that appraisal, hire another appraiser and come up with maybe a different number. Appraisers work in a range of values. It's highly unlikely that any two appraisers looking at the same piece of land could come up with the same number. You need to provide these principles to your tax advisors and make them understand that this is what you want to do, but you want them to uncover the right way to do it for you by weaving these tax benefits into their number crunching. Don't ask the land trust for direct advice. I'm happy to answer questions about the concepts. I would never apply them to your own situation. It's just not responsible on our part. And if you say, well, I don't have enough federal income to offset some of the very valuable pieces of land I want to preserve. So there are workarounds. And I think I talked about these installment sales, or installment donations. I'm working with one woman in Yarmouth right now. She's determined to donate her 30-acre maple swamp next to a well field. But we're doing it in 3 chunks, even though it's wetland. It's appraised higher than wetland because it's next to the well field, providing that protection. So we're doing it in 3 phases instead of 1 because the value is higher as an appraised value. And think about bargain sales as a way to lessen the pain of not getting the top dollar for the property. If you can get these tax benefits into the equation, you're going to feel a lot better than if you just ignored them. Again, the tax code is set up in such a way that we want people to do this activity, do conservation, and to ignore these very valuable and important tax benefits is because of ignorance or laziness, or it's too complicated. That's a shame. And the other thing I've learned is that you can't just fall back on your attorney or your accountant. Use the land trust in your area. They have this knowledge in their heads, and if they don't, they know how to get it. And ask them, what are these concepts? How do I get one of these state tax credits? Will you help me get it? Will you do the paperwork for me? I have seen more land conservation projects go to die when people are thrown back on their own, tax professionals and attorneys. The land trust has to work with them hand in hand. Unfortunately, in Massachusetts, we have a great community that's willing to do that. So take advantage of it. How'd I do? Yeah, I left some time on the table.
You did.
Yeah, that's amazing.
Good. I haven't seen any questions come through the chat. Now would be a good time if anyone is inclined to unmute and ask a question directly of Mark. While people are thinking of that, I'll share one that came through via email either today or yesterday, which was great. So the question, Mark, is about how the cost basis of land is calculated. So there's someone who had, it sounds like the father had died, the land had been purchased in the 50s, and the question was, is the cost basis based on what he bought it for in the 50s, or the value of the land at the time that he passed, or something else?
Yeah. So this is the concept of the stepped up basis in the land. And when the original owner of the property dies, there's a stepped up basis. When it's in a trust, it shouldn't make much difference. The land is now in the hands of new people. The previous owner is left the scene, and so whenever the previous owner leaves the scene, no longer has an interest in the trust. That's when the stepped up basis occurs. But the thing about family trusts is there's no such thing as a simple trust. And as soon as I hear that land is in a trust, I say you have to ask your attorney how these tax benefits flow through the trust, because it's not just a simple equation. Typically, the beneficiaries take their prorated share as beneficiaries in the trust in the value of the deductions and the value of the land. So if I have 3 children, they're each equally loved and each have a 33.3% beneficial share in the trust, theoretically they each share in that to that degree. I found instances where one of the 3 has no money and another one has a lot of money. And so the tax benefits would not be shared equally with those 3 people. So we've encouraged them to work internally within the family to have the wealthier sibling buy down or buy out the share in the family trusts from the more indigent sibling, so that the indigent sibling has the cash, and the wealthier sibling has the tax benefits, which they can take advantage of. That doesn't usually work, but I think it's a concept that should be explored.
Thank you, Mark. Elizabeth, I saw that your hand was raised. Would you like to ask a question?
Yeah, actually, I was the one that sent in
Oh,
that question. Thank you.
So I just provided you with professional advice, which I'm not supposed to do. So you have to test my theory with your own advisor.
So,
Because I'm not inheriting a lawsuit that says Mark Robinson told us that.
no, don't worry. If you, I would be interested in any recommendations of CPAs, or like my own family attorney doesn't really have the expertise in this area, as well as the CPA. Even though I've talked to her about it, I don't feel confident in her knowledge of it. So,
Yeah.
it's
it's sometimes considered a specialized field. Fortunately, we're in Massachusetts. We have access to the best tax professionals in the country here, and the ones who know about land conservation. So talk to your local land trust that any of them I think could turn you on to who those people are. And there may be some, closer to you than others, but I know that the Mass Land Trusts Coalition is also a source of information about who those specialists could be. Sarah, what would you suggest on that?
yes, agree with that. And I put a link in the chat just now, in addition to the Mass Land Trust Coalition website. On masswoods.org, there's a find a professional tool, and you can enter in the town that you live in. And to add to that question, something came through from Carol about what if you start with your local land trust, but they can't really help? Then where should you turn? And ideally, where should the land trust be referring the landowner?
Yeah. So not every land trust has a staff or a very experienced board that can, board members who can help on some of these tricky things. I think that both Mass Woods and the Mass Land Trust Coalition is always available, and can point you to people elsewhere in the state. Some of the larger nonprofits. I just had a referral from for a landowner in Rehoboth, which I had to look on the map to see where Rehoboth was. There's only two places on the world, on Cape Cod and off Cape Cod. So I found out it was off Cape Cod, and that's I'm happy to help people anywhere in the state with some initial advice if somebody wants to get in touch with me. It's free and confidential, and I can also point you to people that I think might be useful in your region.
Great. There's a question from Christina, but let's treat it as if it's purely hypothetical, the type of advice that she's looking for. So what if the deceased did not have the property in a trust, but left the property to the children? And they've been told that the property needs to get appraised, and that will be the new cost basis. And there are 4 of them who own the property, and they're trying to figure out what do they do ideally without selling it.
Without selling it? Yeah.
Right.
So, well, yeah, I mean, the stepped up basis is the value of the appraisal done for the estate at the time of, and then they look back to the time of death. So the time of death is the date of value that the appraiser will use for the estate as part of the probate inventory. And typically, the value of the land for estate purposes tends to be less than an appraisal of the land for sale purposes. And that's just the way the world works. But obviously, it's going to be worth more than it was when the parent acquired it a long time ago. So what can you do? Well, I mean, these are the concepts, the tax concepts that you need to start exploring to see, okay, now we have an appraisal done for the estate. We have some idea of what it's worth. Can we find a way to preserve the land with one of the groups, local, regional, statewide groups that might be interested. And a lot of land trusts I'm finding are overworked and overwhelmed with people coming forward, which is a wonderful problem to have. So, and also when land is in an estate, people typically want to have it disposed of within a 1 or 2 year period. So you may need to work quickly to figure out some path forward. And I wouldn't just, I would start doing it even before the appraisal is done. I think finding the right partner to work with is probably the most important thing you can do at this point.
Great. And we'll do what I think is the last question that I can see before we switch gears to Tom. But Mark, can you comment, question from Ralph, about how much a land trust generally charges for accepting a CR?
For accepting a conservation restriction.
Right.
Highly variable, Ralph. I know that a lot of land trusts feel that when they're accepting a conservation restriction, it's different than accepting a piece of land. A piece of land is an asset. A conservation restriction is an obligation. And the obligation is to monitor and enforce that conservation restriction down through time. It's a perpetual obligation of the land trust or the agency to go out on a regular basis, take a look at the land, make sure it's still intact and the way it was supposed to be for conservation. And so that incurs staff time over the course of years. If a neighbor is cutting down trees on it and the land trust has to take them to court, there's money involved in that. So these are called stewardship endowments, and every group has a different formula. I know some groups don't charge anything, and they do that because they have other ways to fund their stewardship endowment. But you need to think about the fact that you're asking a group, a nonprofit group, to provide perpetual care for that land. And it's not the care necessarily of going out and mowing it and cutting the trails, but you're asking them to do what you want to see done, to uphold your vision of preserving that land. So I think about it as a family cemetery plot. You're paying the cemetery up front to make sure that the grass is going to be cut over your head down through time. And so it's the same idea that you're basically helping to ensure, it's a type of insurance. You're ensuring that that land is going to be monitored and the provisions to protect it enforced on a permanent basis. And so it's very reasonable for a nonprofit land trust to be asking for some contribution. Sometimes it's required, sometimes it's requested. And it all depends. I think it's usually negotiable.
Great. Thank you, Mark. And thank you all for putting forward those questions. We will turn now to Tom to hear a bit more in depth about the tax credit program that we've been alluding to for 6 months at this point.
Okay, thank you, Sarah. Let me see here if I can bring it up on the screen. There, are you seeing that now?
Looks
Okay.
great.
All right. Thank you so much for having me tonight, Sarah, and hello to everyone. I'm here to talk about the Conservation Land Tax Credit Program, of course. My name is Tom Anderson. The state tax credit is hopefully simpler, or certainly simpler than all those, that Christmas tree of possible options that Mark talked about. And it's that way by design. Actually, Land Trust helped us try to simplify it as much as possible. So I feel good about that now, hearing about some of those complicated decisions that you have to make. But so let's talk about tonight. I've got 5 minutes, so I'm going to move pretty quickly here, but hopefully I'll be able to cover other things and questions that you may have. I'm going to talk about the application process. Each of the steps, we try to create some certainty here with the tax credit program for landowners. Important topics and ways to make it easier. And then, of course, how the landowner actually gets their tax credit. When I talk about certainty, this was something that Land Trust also helped out with the idea that landowners, they don't want to donate land and then find out later that they're not eligible for the tax credit, or that we had a problem with something, or it wasn't as valuable or wasn't eligible. So we designed a program that is going to provide certainty along the different steps, 3 different steps of what is available and whether or not you're eligible for it. So at each step of the process, you know where you stand. Okay. Program is run by both EEA and Department of Revenue. We actually certify the donation, that the land has got conservation value, the value of it, what the appraisal was, that the land with the instrument was recorded properly, and that the land is protected in perpetuity with a eligible organization. Department of Revenue, of course, they actually delve out the money in your tax return. We started 10 years ago, 11 years ago in 2011, so we're into our 11th year. We operate on a calendar year, not a fiscal year. That can be very important, especially with the land trust, because everybody that works with the state operates on a fiscal year. And this is one of the only programs I know of where a state employee is working on a program that's based on a calendar year. So if you're going to get a 2023 tax credit or conservation land tax credit, you have to actually donate that land in calendar 2023 between January 1 and December 31st. Okay, we have $2 million available each year for the tax credit program. We are overbooked for that. Right now, we are actually booking money for 2024 for tax credits and for the actual donation. Okay, the way it happens is that the owner applies. You can make a donation every 3 years if you actually have that land. Mark talked about a stepped, process for donating land. So you'd have to wait 3 years to be eligible for the tax credit again. Okay. The gift and the is for the tax credit is going to be what is being gifted. Is it a bargain sale? Is it a full amount that the land is being donated? But the gift portion of the gift for CLTC is what's got to be appraised. And that is also clearly done by you. You hire the appraiser. The idea is that, everybody gets to understand what this gift is actually going to be worth. The tax credit is 50% of whatever that gift. So if you do a bargain sale, for instance, that's $100,000 below the appraised value of that land, then you'd be eligible for a $50,000 tax credit. If the bargain sale amount is $150,000, then you could get the full tax credit amount of $75,000. But if the gift sale is $200,000, you're not going to get any more than the $75,000. It's refundable. What does that mean? Well, it's not the federal process over years and complications. You make that gift at the end of the year, we send that information to the State Department of Revenue, and it's a credit on your state tax return. So you'll actually, that the net amount at the bottom of the tax return, you end up getting the check. And that is kind of a funny process. There has been many people over the years that Mark spoke about who just don't believe they're going to get a check. And you actually do. You get the check from the Department of Revenue. Types of gifts that are eligible for the CLTC program is, outright gift of the fee simple value, conservation restriction, agricultural preservation restrictions, watershed preservation restrictions, and other types of gifts for conservation purposes. Who can receive the gift, who you are actually going to give this land to or give this CR to, ask them to hold. State Environmental Agency, Department of Conservation and Recreation, DCR, Department of Ag Resources, or Department of Fish and Game. Those are the 3 state agencies that are eligible to receive land under the tax credit program. Also, your local conservation commission can receive that land. And then land trusts, they are the private 501c3 corporations that can receive the land if you do give it to a land trust in order to assure it's protected in perpetuity. Even though many land trusts are already intending to do that, the state requires that there be something more than that. So we require that the land be put under a CR. So if you're donating the fee value of the land, that the land trust would have to then give the CR to another land trust in order to provide that protection in perpetuity. Okay. The application process is you have to apply before you donate the land and get approved. Okay, because we don't have any money available in 2022 or 23. So if you donate now and you don't tell us about it, guess what? You're out of luck. Also, it's required in the regs. You have to be approved before you donate the land. This is the time of year where I get those phone calls from CPAs saying, hey, I'm doing my client's taxes. They made a donation. How do I get this tax credit for them? And I say, you are totally out of luck because there is no money available from 2021. Okay, so you submit that application, includes a contact person. The assessor's information is very important. Where's the land? Show us that on the map. A Mass Historical Commission application is also required. We just want to know what Mass Historic thinks of this land also. Tell us about the land. Tell us about its history, why it's important to you, but certainly the conservation values of that land. Include the draft deed or a draft of the CR, even though you're not going to actually be doing it for a year or two. And the property cannot already be protected. So if you actually have a piece of land that you're thinking of donating the land to a land trust, but it already has a conservation restriction on it, that land wouldn't be eligible for the tax credit program, because the idea is this is land that's being donated and put into conservation. For our part one, this is part of the certainty. There's a part one, part two, and part three. For part one, doesn't cost you any money. You fill out the application. We figure out between you and us if the land qualifies for the tax credit program, if the deed or the CR draft is good. You might need to do a site visit. But the idea that the part one is that, okay, the land is eligible. You don't have to go out and spend a lot of money on appraisal for land that we're going to say, no, we're not going to take that land. So we'll give you the part one approval. But now's the time after that is to go out and get the appraisal if you want to continue with the program, because there's no funds obligated as of yet for the part one approval. For the part two approval, you actually go out and get the appraisal done. It has to be done by you, the owner of the land. It's good for up to 1 year. It's acceptable to our program of an appraisal that's less than a year old. It's not tied to the IRS appraisal, although it can be the same appraisal. And request that you give it to me in digital format rather than in hard copy. Okay. But once you get that appraisal into me, then we know, everybody understands what the value of that is. So I can go ahead and give you the notice to proceed. And that entails, that's the part two approval, where it says that, okay, the appraisal's in and it's adequate for now. It doesn't have to be perfect. It'll have to be perfect by the end of the process. But for now, it's clear what the value is, and the various requirements of the intended users being EEA and things. But the important part of part two is that we then go ahead and obligate the funds. So we'll go ahead right now and obligate 2024 funds. And now you know that in 2024, when you donate your land, the money is in fact there. We're not going to come in and say like, well, yeah, you donated it in October, but we ran out of money in August or something. That doesn't happen. With a part two approval, we obligate the funds from 2024 towards your tax credit. There is a waiting list, so it's possible to move up to 2023 or something. It happens all the time, but that's from the waiting list, and that's if funds become available because another application dropped out. There's also the part three approval, which is everything else that could be associated with the land in this deal to make sure there's no surprises, whether it's the title exam and certification of title, if there are any issues with subordinating things, or even the trust. Basically, part three is a chance for any questionable issues regarding your land that you want to ask DCS about, my office. We have to then go ahead and make a determination then. This way, you're sure that, okay, I make this donation, and then DCS comes back and says, oh, this particular lien on the property bothers us, so no, you don't have the tax credit. So that's what part three is, part one, two, and three. Okay. Receiving the tax credit is pretty simple. I send a certificate to each owner with their certificate number, which is their unique identification number, and the amount of tax credit that they get. Many times we'll have multiple owners or beneficiaries to a trust. So we send that to each individual person for their particular portion of the tax credit. I also send that information to the Department of Revenue. With this process, we find it works fine with matching tax credit to taxpayer. We don't want to mess around with your social security numbers or anything like that. You can keep that information to yourself. Okay, the owner will then use that certificate number on their taxes. If they get a 2022 tax credits in 2023, when they're doing their 2022 tax return, they will then use that identification number and they'll get their credit there. Okay. And that's a quick run through, and I'm sure I'm probably over the 5 minutes, but we'll take any questions when that time comes around.
Thank you, Tom. Yeah, so I recognize that we're covering some pretty complicated topics at a quick pace tonight. And our goal is we're putting out a lot of information, but I want to reinforce that we're here to have the more detailed, thoughtful conversations offline with you, or to connect you with whoever the appropriate local partner is. I know Mark is happy to talk with people, and he's offering to do that free consultation. Anyone who's here tonight and wants to reach out, and we'll make sure to include his contact information in the chat tonight and also in the email. So if you're feeling at all overwhelmed, I'd say you're not alone in that at this point in the process, and that's okay. And with that in mind, I just want to reinforce a couple points that Tom made. That whole application piece, you don't have to do that by yourself. That is something that a land trust partner can help you with. And at the land trust that I work for, Mount Grace, we put together those applications and do the mapping, and the landowner reviews it and signs it. But that's an angle and a role that we can play that isn't giving tax advice, it's just facilitating the process. And then once you are in the program, like Tom said, it can last a couple of years. And the goal is not for you to feel alone and worried during that time frame. Your land trust partner is communicating with Tom, making sure that things are lined up and everything is coming together. So it's very much a collaborative process, and you will have support in that process if you choose to go that route. And I'll also mention that the tax credit program is one of the single most important conservation tools for my area of the state in the North Quadrant, because it has nothing to do with income. So it is pretty fantastic. It's based purely on the appraised value of what's being donated. So just something to think about. There are a couple of questions that have come through, one of which I think I'll hold to the end. But Tom, this is another one that came in early via email. Could you speak to how the tax credit works when the land is owned by a family trust? And then we'll head over to Mike.
Okay. When it's owned by a trust, it's very much the same process in terms of the requirement that the appraisal be done, that the deed reflect that, and obviously, or the gift is going to reflect that the trust is the owner. However, so it's really the same process as would be for an individual. We did work it out with Department of Revenue, where since there are a lot of these land donations are in a trust. We worked it out with them where if the trustee or the trustees of the trust send me a letter, which is notarized that they are the trustees and that the beneficiaries of the trust are, and listing the individuals, their address and their percentage of benefit of the trust, that I can turn around with that trustee's letter and go ahead and issue the tax credit directly to the beneficiaries. So that's been a nice, that's cut a lot out, because normally you would think that, okay, if it's the trust sold the land or did the bargain sale or gave the land, that the trust tax return would have to process the tax credit. Department of Revenue waived that and worked out this agreement with the EEA in order to make this a lot simpler for family trusts.
Excellent, thank you, Tom. And we will come back to the other questions that have come in a little bit, but for now, I want to make sure that you hear about some of the great programs that are, I think, talked about a little less commonly especially in these programs which we're trying to address. So Mike, can you tell us about stewardship funding?
Thanks very much. I can't really express how much I love working with Paul and Sarah, as well as the conservation community and the landowners. I think that one thing that I appreciate most is especially, when we come together like this evening and really come together to kind of hear these great ideas. And I really strongly believe that we come together for many of the same reasons, which is that we really share similar values and beliefs of how important this land is and your land as well. So I'll say, the Working Forest Initiative really strongly reinforces something that I learned very early in my forestry career, and that's really and that point I really kind of changed my view of what forestry really is, and maybe even why I kind of chose to become a service forester. And that's really about, forests are more about people than they are about the trees. So I just wanted to kind of throw that, out there it is such a important thing that we recognize how important the human aspect of this is, because those are the decision makers on a day-to-day basis. So, the foundation of what we try to do at Service Forestry is to try to help landowners make some better informed decisions. And that's really through events like tonight. It's also through sharing information and ideas, and hopefully providing a knowledge base that helps folks make some decisions. So it's really about the planning process, and part of the planning process is taking into account why folks own land, and most of the land and why people own it is really not about kind of these productive valleys that we typically associate with forests, things like firewood and timber harvesting and things like that. It's really about these amenity values and why people own land, and it's about the privacy. It's about passing along this land to other family members, and the recreation and all these things that we all recognize. That's very, very important here in Massachusetts. So but to kind of wrap our head around that and why people own land, we also have to recognize that even though it doesn't come out in the research from Brett Butler and other really smart people that survey and understand landowners and why they own land, is in many cases landowners do make decisions to harvest trees on their land. So there is a little bit of an interesting kind of dichotomy there, where the privacy and the nature and the beauty and the wildlife ring very strong why people own land, but at some point during their ownership they're going to harvest trees. So that has kind of got us to this point, and I'm gonna say that I'm real happy that I can at least introduce these kind of newer programs that are coming onto the scene, which is this climate forestry program. And it's really been informed by a number of different publications that have come out, and I've been fortunate to be involved in both the Forest Action Plan as well as the Healthy Soils project. But this is really some of the science and some of the research that is providing us some knowledge base of how to maybe manage the forest in this changing climate. So Massachusetts is definitely unique. We can recognize that climate is a great concern here in Massachusetts, and you can compare that to the rest of the United States, where it may not rank as high, but here in Massachusetts, if you talk to landowners, it is a very big concern. And that really is the function of why we have this kind of newer program coming onto the landscape, this climate smart forestry program. And it's there to kind of be a component of the forest stewardship program and part of the forest stewardship planning process to help landowners frame their forest in a way that is maybe something that they're greatly concerned about, is what impact is this change in climate going to have on our forest, on my forest. So we've been very fortunate to have probably some of the smartest people with regard to climate and forestry at the table over the last couple of years, and it has taken 2 years to get to this program, you know, to birth this program, so to speak. So we've had some really great people helping us and informing us, providing the science behind some of this and some of the outreach that we're doing. So realistically, what we're trying to provide to landowners and to municipalities and others, land trusts, is this kind of inclusive way to consider some of these more pressing issues that are facing us when it comes to planning process. So, you know, the foundation that we always kind of speak to is that, you know, understanding what you have and how to move forward with that, and whatever decision making that may entail, inherently should start with some sort of plan. And so we have a number of different kind of programs that will help you with that. Everything from a forest stewardship plan to something more enhanced, that if maybe you're involved, more interested in bird habitat and the, you know, and that, and then climate. All of these things are kind of plug and play to the forest stewardship program and planning process. So so moving from that, we have added some new publications to our Caring for Our Woods set. We started off with 3. We've added another additional 3 this year. I think the setting goals document that was done with Northern Woodlands, or in cooperation with Northern Woodlands, is excellent, in my opinion. And we've also added 2 climate and carbon ones as well. So the folks at the municipal level, if you're interested in some grant opportunities outside of you know, MVP and so forth, we do have an implementation grant. So if you have an existing forest stewardship plan, we can help you implement some climate friendly practices, or, you know, some conventional habitat type projects, and everything else under the sun as well. Thank you.
Thank you, Mike. And I mentioned this to Mike earlier, but I think he also has one of the most beautiful PowerPoints that I've seen with the layout of that. Mike, could you say a little bit more about how you recommend that people get started? If they see the list of programs and they're thinking that sounds great, do you recommend that they look at the website? And we will send out, Mike has compiled the links for all of these resources, we'll send them out. But is that the first step? Do they call you? Do they look for a private consulting forester? How do people get started?
You know, I think that's a great question, and I think every family and every person has a different approach. You know, commonly I would say that a land trust sometimes is a great first point of contact, or a neighbor. You know, I think neighbors are sometimes undervalued, maybe. Many of the landowners that may be living near to you, or you might have a friend or a family member that may have gone through, you know, Chapter 61, for example, or has a CR on their property, or has worked with the forest stewardship program, or has received some assistance in the past. So, you know, there's a number of different levels. You know, from a service forestry perspective, we always love to have a phone call from a landowner in a town that we're working in, and have an opportunity to meet with you, either in person or remotely, or however you're comfortable with, and have that conversation. And, you know, I think that, you know, that's, you know, Brett Butler, who I find remarkably wonderful because he's added so much to our understanding of why people own forests across the United States, but more importantly here in Massachusetts. But I think understanding why you own the land and why is it special to you. Those are some of the most beautiful conversations I get to have, and get to have the wonderful opportunity to just walk and listen to you talk about your land is I find that such a wonderful experience. So from a selfish point of view, please reach out to the service forester. But again, there's a number of different ways to go.
That's great. And we can send out in their follow-up email some information about how to figure out who your service forester is, because these are state foresters whose whole role is about helping be the go-between between private landowners and private consulting foresters. So they're there, for all of us in Massachusetts as a resource. Okay, thank you, Mike. There are a few other questions that came through the private chat channels that I'll put out there now. One of them, Tom, was for you. Someone had heard that there might be more money allocated to the tax credit program. So hoping that you could give an update about the possibility of the cap being increased.
It seems like just about every year since the program started, there has been, there's efforts being put out by the Mass Land Trust Coalition, maybe others that are trying to point out the high value of this and the backlog that we have. But they haven't been successful so far with getting the amount or the cap raised. But every year is a new year, and this may be the year, who knows. But right now we have the backlog for 2024, and there are definitely applications that move up. They start out in 1 year, but they get to move up 1 or 2 years because of different situations. So I would be optimistic about that, but I don't know about the amount of cap being raised. It may happen, it may not, don't know.
Fair enough. Mark, there's a question I'll pose to you about the compatibility of a playground and a conservation restriction.
Playground on a private property. Is that what we're talking about?
That was my understanding, but if that was your question, you're welcome to unmute and ask it or elaborate further.
Yeah, I mean, to me, there is a lot of things that can be accommodated in a conservation restriction, and to me, it all depends on the size of the property being preserved. So, could you have a tennis court on a conservation restriction? I say, yeah. If it's a 10-acre piece and you're preserving 9 acres and 9.5 acres and devoting a half acre to a tennis court. If it's a 1 acre piece and you're putting a tennis court on it, no, that's not going to work. So you have to look at conservation restrictions aren't necessarily evaluated by size. A very small conservation restriction is certainly appropriate if it's protecting something small like a vernal pool or a scenic view. But if you are introducing uses that are not conservation like a hardtop playground or a tennis court, you want to make sure that you are still preserving enough of the property that you're not overwhelming this little geography with that intended use.
Thank you, Mark. Elaine, I think that was your question, right? Did you want to elaborate on that?
It was my question, because I've been asked that. Where we live is quite rural, and I am working on a CR for other acreage I have, but there's one small parcel I call small, excuse me, under 10 acres that they were talking about putting a playground for kids in this area. And I said, well, that's interesting, and I didn't know how to answer them.
Yeah. So I think, there's 2 ways to handle it. One is as an allowed use within the restricted area. You might want to limit it as to its size and the types of, is it going to be hard topped or is it going to be just a mowed field? What kind of a playground are we talking about? The other is simply to exclude that portion of the property from the conservation restriction. and call it an unrestricted portion of the property, and then the conservation restriction is on the more natural features. So there's
Oh,
different
so
ways.
similar
ways to
to when
handle
you pull out a portion for a house, but the rest of the property is have a CR.
That's what I would recommend.
Gotcha.
I've seen houses, this conservation restrictions go right up to the edge of the house. I don't recommend that. I think you need an escape valve for things that people want to do around their house that you shouldn't have to be checking with the conservation restriction. I like to make sure there's at least a half to 1 acre as an unrestricted building envelope around any kind of house or active use like that. Mark
Thank
has a
you.
different opinion, I'm sure.
I appreciate your input. Thank you.
Tom, were you going to add to that? I noticed that you unmuted.
Oh, I didn't unmute. I think I was unmuted, but I think Mark covered it really well. I mean, that's exactly, I think the way we would look at it at EEA, and having an envelope like that to, or exclusion, would allow for the playground to happen now or later, but then protect the main part of the parcel that's of conservation value would be important.
Excellent. Thank you, Tom. And thank you for rolling with that when I just put you on the spot and you hadn't meant to unmute and call attention to it. I think at this point, let's go ahead and we'll stop the recording and see if anyone wants to ask questions, unmute in that type of environment. And then we will move toward wrapping up and Julia will share some links to our evaluation. So thank you. I'll stop recording.